Welcome to our weekly roundup of key economic and business developments in Sri Lanka. I'm Nishani Pigera, and here are this week's top stories. Domestic debt restructuring initial framework revealed. Sri Lanka discussed at the 53rd UNHRC session. UK's new preferential tariff scheme kicks off. $700 million from the World Bank. In our main story this week, on Tuesday, State Minister of Finance Ranjit Siambalapitiya said in Parliament that domestic debt would only be subjected to maturity extensions and reduction to its interest rates. He specifically mentioned that an adjustment in principle is not planned and reiterated that only treasury bills held by the central bank will be restructured. Siambalapitiya added that the government will ensure bank depositors would not face any issue related to their savings and that funds such as EPF will not face any reduction in their savings or interest rates. However, the State Minister of Finance, Shehan Semasinga, said in a final decision is yet to be reached on the domestic debt optimization, with details only to be provided after President Ranil Wickremesinghe returns to Sri Lanka from his current visit to the UK and France. On Wednesday, at the 53rd United Nations Human Rights Council session currently underway in Geneva, Switzerland, the Council heard updates on the situation of human rights in Sri Lanka. Rita French, the UK's Human Rights Ambassador, welcomed Sri Lanka's initial steps towards addressing concerns around land returns, long-term detentions and corruption. However, was concerned over the continued use of the Prevention of Terrorism Act, calling on the government to protect freedom of expression and association. On Monday, the United Kingdom began implementing a preferential trading scheme known as a Developing Countries Trading Scheme. From now on, 92% of goods will be UK tariff-free. According to Sarah Halton, British High Commissioner to Sri Lanka, the DCTS is a tangible example of the UK's commitment to growing free and fair trade with countries like Sri Lanka, boosting economies and supporting jobs. According to Reuters, Sri Lanka will receive $700 million from the World Bank. $500 million in two tranches is earmarked for budgetary support. This first tranche is likely to be disbursed immediately and the balance upon review of Sri Lanka's debt restructuring progress and the IMF program. $200 million will be provided to 2.3 million vulnerable individuals and households who will receive a monthly stipend. During the first 18 days of June, 52,663 tourists arrived, pushing the year-to-date visitor numbers to over 577,000. This week's strong inflows increased the month's daily arrivals to 2,926. In June, India accounted for 29% of the arrivals, followed by Russia and the United Kingdom. Sri Lanka tourism is anticipating reaching a monthly target of about 87,500. Visitors from China have been steadily increasing and is now the fourth main source market, up from 10th in March. Meanwhile, flights to Sri Lanka are steadily increasing, with Air Seychelles launching a direct flight from Wednesday and Qatar Airways adding a fifth daily frequency to Colombo from Friday. Qatar Airways handles approximately 21,000 passengers per week at the Katunayak International Airport. In other news, LIOC, Sri Lanka's Indian Oil Corporation unit, identified 9 tanks to develop to be done under a joint venture with state-run Ceylon Petroleum Corporation. It is the first phase of the 61-tank restoration project. The government ended all speculation pertaining to car imports over the recent weeks. State Finance Minister Shehan Semasinga said that car imports will not be relaxed this year. He added that it would be only allowed once the economy and foreign reserves rebound to pre-crisis levels. And now let's take a look at the weekly movement of the All Share Price Index and the S&P SL 20 Index at the Colombo Stock Exchange. At the Treasury bill auction held on Wednesday, yields on all maturities continue to fall. Bids amounting to 218 billion were received, of which 110 billion rupees were accepted. The Sri Lankan rupee depreciated against the US dollar this week, with central banks' indicative mid-spot rate ranging between 305 and 309. The government selected Capital Alliance, Deloitte India and Platinum Advisors as transaction advisors for the sale of 4 state-owned enterprises. They include Sri Lanka Insurance Corporation, Canwell Holdings and Litrogas Lanka, among others. And with that, we wind up for this week. Do subscribe to our YouTube channel at the link below for more updates on economic and business developments in Sri Lanka. Until we see you again next week, thank you for watching. Stay safe.